So in this video, we're going to go through, we're going to talk about a stock called Tower Semiconductor. It's about a $6 billion market cap. It has relative volume on the market on Friday and a couple other days. We'll go through the charts and I'll show you that. Uh, this is in the Quantum Defiance ETF, and the alpha you see here, we are using the 1-year alpha. So Taiwan, or not Taiwan, Tower Semiconductor has a 14% alpha over the last year, and it's 23% above its 40-week moving average is what we're looking at here. So that's what I have this sorted by. If you want to know how all this stuff works and everything we're looking at, I have a video that's about 13 minutes long. It's in a playlist all by itself. It's the only video called Spreadsheet for stock analysis, and it explains everything in here. Just go ahead and watch that. With that, let's go ahead and get into this. Don't buy anything based on what I say or any other YouTuber for that matter. This is just information. I'm not a financial advisor. Just want to get that disclaimer out of the way, or CPA or any of that stuff. This is just information. You got to make the decision for yourself whether you think this is worth buying or not. We'll go through the daily, the weekly, and the monthly chart, and we will also go through the we'll look at the Chaikin Money Flow, the MACD, and the trend channel, and some other things. So let's go ahead and get into it. We'll start with the daily chart. You can see Taiwan Semiconductor is 23% above. Before we get to the daily chart, the P is 31, the forward P is 19.56. We have 1, 2, 5 out of 7 buy signals and 2 sell signals. Resistance is 51.54. We broke through that because now we're at 54.73. Support's 43.22, and this is just a stop loss that's 5% below support. You can choose whatever you want. That's just guidance, not a recommendation. Now, if we go to the daily chart, we can see the volume here on the right. We had volume on relative volume. This is a trend line of the volume. We had relative volume on July 17th. If I can hover over this. This is about July 31st, probably, August 4th. And then a couple days later, we had some relative volume that brought it down, but it was still less than the volume that was preceding it. And then we have more relative volume here and here, and we've broken to 13% above our 21-day moving average. This is the RSI 14 chart. Anytime it's above the 50 line here, I consider that bullish. When we get below it, that's bearish. I consider this support and resistance. We're just going to go over here. I'm going to go over to the right. You can see on the 21-day moving average what percentage above it we've been over the last several days. I have we got 3 buy signals on 8/18, and we broke above the 50 line for the RSI, which I consider a buy. It's not really overbought yet. It's just strong. We may get a pullback if we go down. Fibonacci retracements at the 0 level because we're making new highs. Back in January, this was about the same price, and it pulled back, and now we're back to the same price in January. So I expect this to go higher based on the charts, but you always got to protect yourself with a stop loss. At least that's how I do it. It's up to you what you do. Everything's in an uptrend. The price is uptrending. The 21-day is uptrending. The 63 and the 189-day are all uptrending. So that's a bullish signal. ATR stop loss at one time would be 4.73%. 1.5 times 7%, and then 2 times and 2.5 times. You use what you want. We have accumulation because this is the Chaikin Money Flow. We're at 11.5, so we're 11.5 above the 0 line, so we have accumulation. This has a beta of 0.77, so it's less risky. You don't get the volatility. So this is more for a conservative trader, somebody who just wants to make money and not take on as much risk, with a 14.33% of alpha. Fibonacci, we can go back a couple days here, and you can see at one point we're at the 65, 59% level. So that's kind of what you would call the golden zone. And then we just started breaking them back out up here, and now we're at 54.73. Now we'll just go through the quickly. We'll go through the 63 and the 189-day, so we can see how far above that we are. We're 22% above the 63-day. Now, what I do, if it breaks below the 21-day, the next level of support is the 63-day. The next level of support after the 63 is the 189-day. That's how I do it. You can do whatever you want. And I follow that same logic for the weekly moving average and the monthly moving averages. So let's go ahead and look at the 189. We are about 24% above that. So we're in a nice smooth uptrend. Now if we go to the weekly moving average, we have relative volume here. We're at 7 million, which was only 4 million week closing 815. And these are the Friday closing prices. That's how we get our weekly moving average. We take every Friday closing price for the last week, for each week over the last year. This is a 1-year chart. So you can see we fell below the 40-week moving average here, and now we're above it. Now if we go to the 30-week, we're 23% above. 30-week, we are 30% above the 30-week. We are 17.79% above the 10-week. And you can see this is in a short, this is one of the shorter time frames, and we're in a nice uptrend here, and it's finding support here since it's broken above, and it broke above here back in May at that 10-week. And then we are 12% above our 4-week, which is a very short term. It's kind of like the 21-day, but on a weekly time frame. So it equates to 20 days of trading. Now if we go to the monthly, we have broke above here. You can see we came down, and this is the 12-month, and I consider this a very long-term level of support and the last line of kind of support. And you see we broke down here in March 31st, and the market itself was breaking down, and then we came back above right here on June. And this is a good place to maybe take a shot on this, because we're breaking back above this long-term moving average, and it's trending up now. So right here is 51, and this is a 1-year chart of this 12-month moving average, and this is the highest price, and we broke above that. So there's really no sellers up here, right? Because we're at 54 now, and nobody that has, people get back to this 51 that bought it here, and they're like, I broke even, I'm getting out. Well, nobody, now that we're past that, there is nobody that's bought it is saying, I broke even, I'm getting out. Now we're just going to go over to we'll look at support and resistance. You'll see we broke through this resistance line. It was at 51.54, which we saw on the moving average page. And this could act as a level of support, so you might want to wait for a pullback to this level, because you may see this. There's always going to be, when we break out like this, there's always going to be some, not always, but a lot of times there's profit taking. So if you're patient, you may get a better price than this. It may not come down from here, and the idea here is, if you want to be patient, if you don't want to be patient, maybe take a third of a position or a quarter of a position and then add to it on pullbacks, not breakdowns, pullbacks. If we look at the Chaikin Money Flow, you can see we're in pretty much a sideways trend to a slightly downtrend. Let's see here. Is this downtrending? 4807? 40, yeah. So this top line is downtrending, and 37. This bottom line is downtrending, but we've broken out of this downtrend channel. It's very, very slight downtrend, a penny. So this is probably going to start to turn sideways and maybe even up. So over the next year, this stock should go up based on what we're seeing. But we would always, you can always protect yourself with stop losses. And right here, this is another level of support because we broke out of this channel, the 4807 level. And then you can see our MACD is in a bullish, it's crossed over to be bullish. It was bearish, now it's crossed over to be bullish. You can see the histogram here, and you can see our Chaikin Money Flow. This is a 1-year chart of the Chaikin Money Flow and the MACD. And anytime we're above the zero line, we're in accumulation. When we go below the zero line, we're in distribution. So we have accumulation here, and now we have distribution. We want to be buying a stock when we first go into accumulation and selling it when we first go into distribution based on this chart. Now, we've been in distribution here all the way to here, and now we just went back into accumulation. So this accumulation is just starting, hopefully. Not gonna, this is another level you could use to for support. If it broke below the zero line, you could say, okay, I'm out of here. But as long as we stay in accumulation, this is a stock I'd want to own. I have no position in this stock, and I may take a position, but I will wait several market days because I'm doing a video on it right now. I don't want to, even though I only have a handful of subscribers, I don't want to be pumping or trying to dump anything. Although this is a $6 billion market cap, I don't think I could do that. Has plenty of liquidity. You can get in and out easy. You have plenty of volume. that's really all I got for this stock. If that interests you, I try to keep these. I'm going to try and keep these videos short and try and talk about stocks that look interesting based on either breakouts, pullbacks. This one looks like a breakout based on what's happening here. We had relative volume. One last thing we'll look at is the relative volume page. So this is from Friday. You'll see this one, Tower Semiconductor. It's 23% above its 40-week moving average because that's what I have selected on the moving average screener. But it's up almost 10% from its previous close, 7.5% from its open, and that's on 3.61 times relative volume over its last 30 days of average volume. So you have liquidity to get in and out of this stock, and it looks interesting. So I just wanted to talk about that in this video. If you like that, consider hitting the like and subscribe button. I hope that was helpful. This is not a recommendation. You need to make the choice for yourself what you do with this information. It's your money. You're putting your money at risk if you choose to buy this, or if you watch this video and you say, nope, I don't want to do it. I totally understand. It's up to you. Thanks for watching, and that's all I got.